So it's time for another crypto market brief. Today, we're going to be talking about are institutions max bidding Bitcoin and when are we going to the moon? What are the chances of a Bitcoin spot ETF being approved? How bullish is the market? The rundown on the macro, price predictors feeding you hopium if the ETF gets the green light. So my name is Trevor with CMC and let's dive in. So first of all, are institutions finally max bidding crypto? Well, just when it looked like the FUD was going to get better of the bulls, crypto was thrown an unexpected lifeline. Not all heroes wear capes, some actually wear suits.
Nothing suits me like a suit.
The BlackRock Bitcoin spot ETF application is a big deal, but the real news was how it seemed to trigger an avalanche of institutional interest in the crypto industry. So let's see, we have the Deutsche Bank applying for a crypto custody license, and yes, that's the same Deutsche Bank that described Bitcoin as an asset based on wishful thinking in 2021. We have EDX, a crypto exchange backed by Fidelity Investments, Charles Schwab, and Citadel Securities, which finally went live. And they didn't exactly hit refresh on the top cryptocurrencies since the exchange only offers Bitcoin, Ether, Litecoin, and Bitcoin Cash trading thus far. But it's backed by some big fish. Next, we also have MasterCard, which filed a trademark application to develop crypto software, which is probably nothing. And then we have Invesco, which is another institutional investment company, which reapplied for a Bitcoin spot ETF. And let's see, they have only $1.4 trillion in assets under management compared to BlackRock's $10 trillion. But hey, any bit counts. Then we have Valkyrie filing for a spot ETF as well, which the ticker name is BRRR or BRR Legends. Next, we have Santander, which is Spain's largest bank, and they showed interest in the Lightning Network. Again, probably nothing. And then we have BlackRock, Fidelity, and Vanguard with increased exposure in MSTR. And Michael Saylor, of course, loves to hear it. And then we have the GBTC share price, which surged after news of the spot application broke. Oh, and crypto native asset managers hopped on the spot ETF bandwagon because you might as well if BlackRock does. And yes, all of that happened in the span of a few days, except for the MSTR piece. So the Q1 macro brief closed with the following conclusion. Macro in 2023 will set the tone for crypto's medium-term price development. And that seems more true than ever. But let's not get ahead of ourselves. Can the spot ETF really get the thumbs up from the SEC? So let's talk about the chance of a Bitcoin spot ETF being approved. So far, Gary Gensler has been steadfast in his agency's position on Bitcoin spot ETFs, and they are a no-no. But why is this even important, and why could this be your last chance to make it? Well, where there is a crypto narrative, there's a way for crypto to go to the moon. So in other words, yes, it would be a big deal if this actually got approved. And Bitcoin would get the BlackRock stamp of approval for other institutions and anyone of rank and also file and TradFi. But can BlackRock's amazing streak of 575 to 1 ETF approvals overcome the winless Bitcoin spot ETF streak? The asset management firm seems to be confident that it can do this with one weird trick, and the SEC hates it. To get your Bitcoin spot ETF application approved, a surveillance sharing agreement between NASDAQ and an approved exchange. You see, the SEC has been slapping down applications for fear of price manipulation, and since it does not consider any significant exchange legit, the answer to all applications so far has been no. Can it get it done this time then? Opinions on crypto Twitter differ. Noel Akeson, former head of research at CoinDesk, thinks it's more of a political message to the Democratic Party, which BlackRock's CEO Larry Fink is affiliated with, to go easy on the whole banning crypto trip. Justin Slaughter, policy director at Paradigm, disagrees, and his take is that BlackRock has the influence and the timing to get it approved, as the Grayscale versus SEC lawsuit may end with a defeat for the SEC and also open the door for a crypto native spot ETF to be first. And then Nick Carter agreed, and his suggestion is that the SEC may in fact have given BlackRock a silent nod of approval to get first in line. So the entire narrative shows institutions are more bullish than they let on. Now, surely this was really bullish for Bitcoin, wasn't it? So how did the market react? Well, not much of a cliffhanger here. Yes, Bitcoin teleported back to over $30,000 on the tsunami of hopefully good news. Even a look under the hood suggests that this is good for our favorite orange coin. So the rally is being driven by spot buying instead of a short squeeze. And who's been violently slamming the long button on exchanges? Well, it turns out it's been the Americans. And finally, good sign, stablecoin inflow is finally turning positive and has recorded its first 2-week uptick actually since February. So is it all good again? Bull market, here we come to the moon right now. So let's talk about the macro situation in Q2 of 2023. So the Fed recently changed course and stopped hiking rates. Enter the new macro main character, the hawkish pause. What is this, you ask? Well, when the Fed tries to pause rate hikes, but doesn't want everyone diving in headfirst into JPEGs and frog coin trading, they cloak their decision with a lot of spooky talk about how that's only a temporary breather. To the Fed's credit, it has been doing exactly what it has been telegraphing it would do. So no reason to doubt a rate hike is coming in July, right? Well, the markets don't see it that way though. With inflation coming down for now, some commentators on Twitter wonder whether the bear market in equities is actually a thing of the past. In case you're not following equities, they've been printing for the last few weeks, which is not the kind of decoupling crypto investors want to see. Time for crypto to catch up now? Well, overall, the theme is that it's a game of chicken between the Fed and the market. And at the moment, it seems the Fed is winning. So that would be a bearish catalyst for the crypto market. How about the long term though? Well, here's the deal. Leading up to the halving next year, you should not expect any magic from the crypto markets due to volatility, volume, and realized value at multi-year lows. Glassnode read the on-chain tea leaves, and the market is likely in an accumulation phase marked by boredom and investor disinterest. As Bitcoin Magazine points out, 2018 also saw a rally and more sideways crab, and the market can stay boring longer than you can stay disciplined. With that being said, let's listen to some crypto Twitter hopium on where an ETF approval could take prices in the really long run. So how about a cycle of institutional money buying our bags, followed by government? In any case, Bitcoin is likely going to enter the political mainstream really soon. Here's another dose of hopium by Adam Cochran, who suggests even a sprinkle of institutional controlled boomer pension money could cause a 15x for crypto prices. If it does happen though, the final approval would be in 8 months. Crypto Twitter isn't expecting prices to teleport immediately. There still seems to be some bear market PTSD at play. Whatever the outcome, crypto isn't going away anytime soon, and the show must go on.